5-star copies all. Go ahead. Message to observer. Alpha 3 rounds, AT delay in effect. 3 guns. Bravo 2 rounds, 2 guns, smoke on effect.
Hey y'all, this is Andrew from the Options Millionaire community, and welcome to another episode from the How To series, a series dedicated to helping you learn everything options related, from basic analysis to execution and everything in between. Today we're going to be talking about a subject that's very near and dear to my heart. It's something that has allowed me to refine my strategy and sharpen that axe week after week, month after month, to become the trader that I am today, and that is how to predict market movement using pivot levels. So I already have one video on how to develop levels, but that is when you're down in the weeds, when you're very far away from all-time highs. You've got a lot of historical volume data, and I'm sure you've all seen it. It's this Dynamite Levels video here, but this video is going to be tailored to a more analytical approach. It's going to be bringing everything from historical volume to potential volume to coming up to all-time high levels, how I was able to continue the past 3 weeks of hitting all-time highs and still nail levels, sometimes down to the penny. In fact, last week I was able to nail the top and the bottom of the market, literally down to the penny. A lot of people ask me how I did it. Well, this video is explaining exactly how I do it and how I tie the amazing tool SpotGamma into that system. Now, the SpotGamma tool is going to be the golden egg that unravels all these levels at all-time highs. It's what allows me to be so accurate without very much prior data. All right, so this is SpotGamma, www.spotgamma.com. Fantastic tool. You're starting right off the bat with some real-time updates. Obviously, it's not going to flow today because this is the weekend. But the first thing you're going to come to is absolute gamma levels. Nice and easy to understand, self-explanatory. You've got current expiration in black and then next expiration in gray. And this pinpoints the largest levels of gamma indicated at each strike. So this is for SPX 4600, approximately 4650, and then 4700. And you can click back and forth to SPY as well and show that. If you want a little more detail though, you can come on down for the total combo strike. You can change back and forth between SPX and SPY with the switch, but I look at both just because I like to form levels based on both. But you can see here in SPX 4702 was a big gamma level down here, 4655, and then 4678, which are levels that correspond greatly to the levels that we formed in pre-market. And then switch over to SPY, you can see it as well, 468.87, which I elected to make that just our absolute R5, our absolute level up top, and then bottom is 464.23, and then with my volume analysis, I calculated 464.28, which I adjusted, and it worked out pretty dang well for the bottom of Friday's range as we kept on coming down and bouncing off S1. And you saw that that's a very bottom line number. There's not much support underneath that, and that's why I said in my analysis that if we were to break S1 to the downside, that it would smoke greatly to the downside. So that's why I was sitting on my hands until the break. I wanted the market to tell me what to do. Are we going to break upwards or are we going to break downwards? And that was one of the main reasons, because if that gamma level broke to the downside, we would have considerable downside, and obviously that did not happen. So all in all, you can definitely see how this total combo strike chart here works. I'd like to identify big levels of gamma, notated at 473.97, for example, 468.87, so on and so forth. I want to note negative gamma and positive gamma. You could definitely see, just by looking at this one chart, for example, you can definitely see that we are in a positive gamma environment, which puts a lot of low risk for downside movement. And until this gamma starts being expired and eaten up, we're not going to have a big downside move. At least the chances of a downside move are negligible compared to the upside. So, and you can get all that data just from this chart. That's why out of all the SpotGamma stuff, this is my favorite tip-top chart to look at, and then we'll go through the rest of them right now. So next on the list is open interest and volume adjustments. This is their chart down here that monitors SPX, SPY, both put and call volume. Right off the bat, you got the OI change, you got call OI and put OI down here as well. And then of course they actually throw in yesterday's, I guess I should say in this instance, the prior day's call volume and put volume, which starts to give me the good idea of where big money is placing their bets in terms of large open interest orders, both on the calls and the put side. And they also have it for SPY. And this helps me identify the key levels that I form on my support and resistance pivot levels. Because I always said I tie in gamma levels as well as volume analysis as well as open interest items. So I just come through these charts and I pinpoint the major levels and I try to correspond those to the gamma as well. So the 468 level, for example, on SPY, as well as a call open interest here. And I see 470, I see 465, I see 460. I try to identify strong levels that I can start notating these down. Then of course we have this hedge out here at 500. Just a good example of the data here. Just another data point to start gathering all this data and identify key levels. This is gamma tilt. I use this chart to identify market sentiment shift because any rapid decrease in the gamma tilt, or increase for that matter, can signify sentiment shift. So a big downside movement in the gamma tilt can indicate that a put hedge has been put on by some large money, and then the opposite as well. So if there's a big shift upwards in the gamma tilt, you can anticipate some bullish action as a bullish hedge has been put on the market. And of course, I will throw in here, if you don't really understand how to use these charts, they throw in these little cool informational drop-down boxes that you can read what's being conveyed, what you should get out of it, and what you should do about that once you actually convey this information. They do a good job of conveying this information to even the basic user. The next one is delta tilt. This is for monitoring rapid conditions in the market. So the delta tilt, if you see a big upwards action, a delta tilt, you can anticipate bullish action, and a big downwards action, delta tilt, you can anticipate bearish action. And look how it corresponds in the market too. This big upwards movement here, you see a big spike, a big downwards movement, big down spike, so on and so forth. So you have this big upwards movement here, you see this big upward spike in delta tilt. And then now, since we're up here at 470, you start to see this downward tilt here in delta. Maybe that anticipates some downward action in the market coming up here the week of what? November 20th. So let's be on the lookout to see if this delta tilt and the gamma still starts tying in some negative downside action here into the market. And then last but not least, after that, we've got large open interests, which you can kind of come down here. You got SPX, you got positive gamma, all this open interest on several different categories: large put OI, negative gamma, expiration concentration, all this stuff on SPX and SPY. Just more data to start tying in to develop your overall thesis. So you can kind of see it's really not all that difficult. I know it's a lot of data, a lot of numbers, a lot of charts. It looks very high level, and it is. But if you do spend time reading this stuff, start applying it to your system, start applying it more importantly to start developing your pivot levels, you can start to understand how this ties together, how this works, start predicting how the market will move like we did on November 12th. Now, how accurate can these levels be? Well, now here's a chart for November 10th. Now we pinned that almost down to the penny from R2 and S4, the high and the low. Awesome stuff. Let's go back even further. Here's November 5th. Literally pin the high and the low down to the penny, both sides down to the penny. And it just keeps going and going. More accurate data. Let's look at November 3rd. Pinned almost the bottom down to the penny, multiple levels on the way up, and then we pin the high before going up a little bit higher right before close. Now this is just instances of showing what we can do day after day, week in and week out, of providing accuracy by analyzing the market data behind the scenes. But that is all I got for you. I hope you learned a little bit something about SpotGamma, how to use it, how to start tying it into the charts, and how I use it to form these levels. Exciting news now, the merchandise store is finally live. This is the link right here. It's also linked down in the description. Come check out that link. I've got a lot of good products coming out right now. We have our limited edition hoodie up and ready to go to get those shipped out. We'll be adding a lot of products coming up here in the fall and the wintertime, products that are both branded by OM stuff and maybe some cool trading stuff along the way about some cool sayings that people like to have. So come take a look out, see if there's something that you like. If you're new to the channel, hit that like button and subscribe. It gets you access to all my educational content, as well as my how-to series that's coming out here in the fall and the wintertime, as well as my Monday, Wednesday, Friday live streams. Come join the community Discord. Link is down in the description. Come join a community that's based heartily on education, communal learning, and support. So thank you all for being here. As always, remember, the only thing between you and financial greatness is the decision to be better. Until next time, I'm out.